Hi everyone. Imagine one day you start going through your mail and all of a sudden you come across an envelope from the Internal Revenue Service. You think that it might be just an extra check, an extra refund that somehow got lost in the mail, but in reality what you find is an audit notice. In this video, I will answer some of the most frequently asked questions about IRS audits. We'll chat about the audit process, how far back the IRS can audit. We'll talk about cases when a statute of limitations does not apply, as well as how long a typical tax audit may take. Previously, I uploaded a separate video on the biggest audit red flags. I recommend watching that video next if you haven't already. It will provide additional context. Additionally, the IRS has specific documentation requirements for retention purposes. I plan on uploading a separate video with the details soon, so if that's something you're interested in, make sure to check back. If you have a question that is not addressed in this video, leave me a comment below and I will incorporate it in the future video on this channel. An IRS audit is a review of an individual or business accounts. The goal of a tax audit is to make sure that tax evasion is not taking place. Remember, tax avoidance is perfectly legal. In fact, you should be practicing it already. But tax evasion, on the other hand, is illegal. How far back can the IRS audit you? Well, in most cases, Internal Revenue Service audits reach back 3 years, but there may be exceptions. If the IRS starts an audit and they see errors or other red flags, which I've covered in detail before in a separate video, the tax agency may audit additional prior years. It is quite rare for the IRS to go back more than 6 years in an audit. The IRS statute of limitations for an audit is 6 years. Having said that, I would also like to point out that there are some complex tax-related issues that actually don't fall under this rule and have no statute of limitations. A quick example is failing to report foreign income or a foreign gift that is valued at $100,000 or more. There are no statute of limitations in this case. Additionally, there's no IRS audit statute of limitations if you have never filed a tax return before. And fun fact, there is no statute of limitations if you forget to sign your return. The IRS can consider it not filed at all. So that is very important. The same holds true if a tax crime has been committed and a fraudulent return was filed in the past. No statute of limitations, the IRS will go back as far as they want. One thing I want to point out here, many people perceive an audit as an investigation, and I want to tell you that that could not be further from the truth. An IRS audit is not a criminal investigation. An audit is more of a detective tool to identify errors or inconsistencies, which in some cases, of course, may lead to discovering fraud or other types of incompliance. The IRS may start a criminal investigation if it detects possible fraud on an income tax return. These suspected cases are forwarded to special agents of the IRS Criminal Investigation Division. If the IRS sent you an audit notice, how long would an audit take? An audit is never quick, of course, and I say this as someone who spent many years working on audits. Most tax audits take less than 2 years. The actual length of the audit depends on the audit type, its complexity, and whether and when you provide all of the requested documentation. Individual taxpayer audits are usually relatively quick, depending on how quickly you share any additional documentation with the IRS that they may request. We'll talk about documentation in just a couple of minutes. Business audits, depending on the structure of a business, may take up to 2 years. In the beginning of an audit, the IRS will request additional documents from you, and it is very, very important that you do provide whatever they request as quickly as possible, because even though we all know that the IRS does not exactly work quickly, but regardless of that, you need to make sure that you do everything in your power to make the process for yourself if anything else, as easy as possible. So just share with the IRS whatever it is that they're requesting. If something is not available or you just can't find the document, just let them know why it's not available so that they can move forward or figure out a way to work around it. But don't just ignore the request, because as we all understand, the IRS will not just go away. I don't think I need to say this, but if you know that your case may be more complex or you're just not comfortable handling it alone, go ahead and hire a tax attorney who will handle the process, and they will communicate with the IRS directly so that you don't have to. Next, let's chat about the type of additional documents that the IRS may request. This will vary, of course, but such records might include bills, canceled checks, legal papers, loan agreements, invoices, and receipts. Basically, records that are produced by third parties that would help verify whatever it is that you're claiming on your tax return. Let's say the IRS finished your audit. What's next? How does an audit end? There are several possible scenarios here. An IRS audit concludes in one of three ways. If the questioned items are substantiated with good documentation, there is no change to your tax liability and both parties go their separate ways. The second way that this may develop is if the IRS disagrees with you. The IRS might propose changes to a filed tax return, and in turn, the taxpayer understands what the changes are and agrees with them. So the taxpayer pays whatever balance may be outstanding, if any, and both go their separate ways. The third scenario is if the IRS proposes changes and the taxpayer understands what those changes are but disagrees with them. This is when the taxpayer would really need to hire a tax attorney to prove their case. An audit may be clean, no issues, or it may have findings or additional taxes and penalties due. At that point, you will have two choices. You can agree with the results or you can dispute the results. What happens when you agree with the audit results? Depending on the type of an audit, if you agree with the findings, you will sign the audit report, you will pay additional taxes if any, and that will be the end of an audit. A more important question is, what happens if you don't agree with the audit results, right? Well, if you disagree with the IRS tax audit findings, you have two options. The first option is to request a conference with the IRS manager. You can pursue appeals mediation. This may be a good option if there aren't any serious issues and you have the information needed to support your own position. The second route is to file an appeal. An appeal is technically a dispute without any litigation. At this point, you will really need to hire an attorney to help you with the process. So I hope that this video was helpful. I hope that this information was helpful to you. Comment below with any questions that you may have. As always, I would love to hear from you. Thank you for watching the video. Thank you for taking the time. Remember to give it a like, subscribe, and share it with your network, those who may be interested in this type of content. Have a great rest of your day, and I will see you in my new video soon. Bye for now.